through the markets in the region. Clearly, it's been a case of some of these markets giving back some of the recent gains. Let's start our wrap from the BRVM. The BRVM 10 index closed trading at 244 points yesterday. It was down 1.7%. Meanwhile, the all-share index, the BRVM composite, also lost 1.5% to close at 216 points. Total value traded on the market was 1.1 billion CFA francs, so pretty strong volumes traded on the day, while the currency is currently trading at 499.5 CFA francs to the US dollar. And moving on to Ghana, we saw the GSE Composite Index close trading at 1,868 points. That's down about 0.4%, keeping its year-to-date change at around 55.7%. On the other hand, the GSE Financial Stock Index closed at 1,620 points. That was down just under 0.6%. Year-to-date, the market is up, or rather the index, the financial index is up 55.8%. And on the currency front, like I did just mention before the break, the CD under some pressure, currently trading at about 2 cedis to the US dollar, keeping its year-to-date change just under 5%. I moved on to Nigeria. Of course, there has been some volatility there. The market has, the momentum that we saw recently has waned a little bit. The NSE All-Share Index closing trading yesterday at 39,510 points. It tested 40,000 at some point during the trading day, but came back a little bit and the gain on the day was just over 0.1%. And then the top gainers on the day included Nestle Nigeria, CAP, Okomuoil, Presco and UACN, while the losers included the likes of Guinness, Dangote Cement, that has been moving the market up recently, shed some points, while FBN Holdings and Julius Berger were also among the losers. And meanwhile, on the fixed income side of things, the bond yields in Nigeria are on the rise, even as the Naira comes under pressure resulting from increased dollar demand. To get the latest on the Nigerian fixed income market, I'm now joined by Dari Otitoju, an FX trader at Stanbic IBTC Global Markets. Thank you so much, Dari, for joining us. And I think the big discussion over the last couple of weeks has been the Naira weakness, and then of course the somewhat dramatic moves we've seen in yields. What do you make of this? Because if we look at the performance this week compared to where it was last week, we've seen yields on the bond side move up well over 100 basis points.
Yeah, I think the offshore actually started the move. They started by actually selling into the market. Right. And then the CBN governor also came on air to also complain about the spending that is going on, and that if that continues, then he might probably have to take some measure. Market expectation before now is that we're going to probably see some easing towards the end of the year. But now, the CBN governor is probably talking about the reverse. Right. So we might probably see a tightening rather than easing. So that's also got the local market players start panicking. And right. Some of them had very long positions, and they have to sell down those positions.
Right. I think that's a key point, a change in sentiment there. At some point, I think the market was hopeful that we may see some easing, but now it seems that is unlikely to happen, at least in the medium term. Your thoughts about where yields could go from here?
Yeah, currently we're at an average of 13.5, and then it doesn't take the markets anything for them to take it to probably 14 or 14.5. But the reality of it is that at these levels also, we saw especially yesterday, that the offshore at these levels were interested, and that was what actually brought the reversal, and that was like trying to create confidence also in the market. So if we continue to see offshore interest at these levels, then we might probably go back to even 12.75, because at 12.75 they started showing interest actually to start buying. But because yesterday we didn't really see too much of volume going through, it's more of a panic and then one-way kind of trading, and not too much volume went through for us to get to the 13.7 before we eventually settled at 13.5. But we saw offshore actually participating to close to a close of business yesterday, and so we expect that probably the trend might continue today.
So across the curve, where do you see most of the foreign interest? Is it in the short end, or are we now beginning to see some offshore investors participate in the bond market?
Now they're beginning to look at the mismatch. There are some of them that you actually have mismatch between the long and then the medium. The long for me now is the 20 and the 10 years. So you actually see initially that some of them were actually selling off their middle, like the 7 years, and then buying the long end, which is the 20 years and then the 10 years. So once the correction happens and then all the bonds are at reasonable levels, then you might probably see them also picking up. Anything that is above 13.5 and 13 probably might still interest them for them to pick.
Right, and very quickly, what are your thoughts on the outlook for the Naira, given the dynamics we're seeing, particularly with the foreign investors?
Yeah, net in terms of maybe within a week now has actually been a net outflow, especially from the offshore, and that was because they started the move. But now that they started buying, we might probably see some reversals of that. However, in terms of for the exchange to be at this level was that most market players were actually expecting NNPC to do far more than what they offered in the market. Some people were actually expecting up to $500 million to come, but eventually you had less than 200 million. So that is the reason why you have this. But at 159 last week, we saw CBN intervene. So clearly, if you cross 159 again, we will probably see CBN intervene.